Hi, Natasha. We're looking through your books, and this is part of the file review that we actually do it live on Zoom so that you can, on a recording, so that you can see firsthand what we're seeing. And then we'll also do a short write-up so you'll understand what issues we see. So take it away, Sarah, since you're
Certainly.
the driver.
Okay.
Mhm.
So on your advanced client costs, which I know is a rather large concern, we did find some things that caused us to need to reevaluate how this is entered. We'll just pick on Todd Furman for now, and I'll go ahead and open this up. So Todd Furman has a lot of expenses incurred. And then we have this large sum of money that has come in. So we're not seeing an invoice for this in the client side. A large sum of money comes in here, so it appears like we owe Todd $37,000, which I presume part of this is legal fees as well. I would presume that, and the rest to cover those costs. There are additionally other client accounts that are just accumulating expenses, but we're not seeing where many of them just zero out with an invoice at a later date.
No, most just
So,
show us expenses inside. When we clicked in, there was just expenses and no offsetting invoice. So with advanced client costs, the expense happens and then you invoice it and you get reimbursed. So they negate each other.
yeah, exactly. Another thing that we noticed, and I'll just cut back over here. So when we're looking at your profit and loss and we're looking at your revenue, and what naturally stood out to us was this Ask My Client. And we saw the exact same money up here in this particular report. So I believe I've got them pulled up here to make it easy. So I see the deposit of 7.5 coming in. And it's just as if it's 100% earned revenue. And then it leaves the business and goes to a money market account. So we'd like to understand a little bit more about this because this doesn't actually look correct in the way that it's booked, but we don't have enough details behind it to understand, is this supposed to be held in trust? I'm presuming there's a large portion of it that goes back to the client potentially, and the fees earned for you. And the fact that it's sitting on your financial statement, the profit and loss, I don't believe that's the place it needs to be. I honestly think that this whole entire thing needs to be on our balance sheet. And we don't want you to have taxes and earnings and expenses against something that you fully haven't recognized as true revenue. So that's another area. And I'd like to be able to kind of go through this account too. There's so much sitting in here that I believe really just needs to be realigned and properly coded. And get this tied out a bit better. Because the other part too, for Linda and I, is when we look at revenues that jump up this high, we want to see the correlating, as an S Corp owner, the correlating expenses in the officer's salary to appropriate against something like that, and all the additional funds that need to go on. So this was another area there. We do see a lot of area of improvement just in general on your profit and loss, your chart of accounts, the way things are laid out and grouped or not grouped properly. We'd love to see that cleaned up, similar to some of the items. Just want to understand how this works for you. We do see this occasionally. Just
Mostly
with
with contingency firms. So firms that
yeah.
have a lot of expenses that they're paying up front, so they line item it out so they can make sense of all the money that they've spent. And then they recoup it when they've won the matter, or if they didn't win and they completely lost it, then you book it down to billable expenses unrecovered.
I just wanted to know how this helps you, just seeing it visually this way, or if there's a different way. And then we do have some other areas of concern. This should not be negative. So when I see something like that, that means that we need to give the business $48,000.
Yeah, and I think, Sarah, when you open that up and pull that, expand that out, you can see where it's in and out to zero. It's just kind of weird. The dating of it lands where you get a negative number because it is in there where it's flowing in and out and clearing.
Yeah, but it should be reconciled.
Yeah, it definitely should be reconciled.
And it's got a date. There's something wrong that has occurred in here.
Mhm.
So yeah, there's that. Oops, let me just go back to my original. But yeah, I see what you're saying, Linda. And then, obviously just kind of with everything, just making sure what we see here is accurate. These are the accurate balances to tie out for you.
I didn't
And
see any book to tax entries either, so it's not aligned with the tax return, I don't believe.
yeah, probably I should look at that.
There was an account there that said accounting cleanup credit cards. You scroll down. Clearing, sorry, clearing.
It might be because some of these accounts have parent and sub
Yeah.
accounts.
Mhm.
It could be that this was just kind of laid out incorrectly maybe at one point, or just not tied out the right way. So they needed an additional.
And there's a
clearance.
due to trust account, but I didn't see a trust bank account on the balance sheet.
Yeah, that was also, yeah, so we've got due to from here. So where is? Yeah, we don't have a trust bank account up here, unless that's what we're referring to as this.
Yeah, it's typically not money market, and there's hardly any money in that.
Yeah. So in summary, yes, you were probably right in suspecting that you needed some help here in realignment of information, which obviously we can do. And then just trying to understand a little bit more of what is valuable to you, what works for you as far as reporting, what is it that helps you make sure that you feel like you have confident numbers to run the business. And that's what we'd like to learn, to tailor reports to that as well for you. So
Thank you.
thank you. Yeah.